Man, I got my butt kicked today. It's nothing too serious, but we need to talk about it. Let's take a look at my positions and how I did. All right, you can see on the day I'm down nearly $400. My biggest hitter is copper. I'm down $156 and I'm down 100 on the position so far. So we'll get into more details on that and how my account is hit by that. Let's look at Tesla. We had a big drop this morning and it actually had some buying pressure up in the afternoon. We'll go over my 30-20-10 strategy in the E-mini S&P 500. I want to talk about why I closed my two bond positions. So before we get into that, let's take a look at my trades for today. So with my 30-20-10 strategy, I actually opened two positions. One right here and collected $75 in premium, and another right here collecting another $75 in premium. The reason why I did two positions today is because when the market opened, I had a 29 days to expiration option and a 30 days to expiration option. I think it had something to do with being closed Friday, so I decided to go ahead and open those two positions. That created another issue for me though. I didn't have enough capital. I was sitting around 110% on my buying power for my portfolio, so I had to liquidate. I decided to go ahead and close my two bond positions, and it was ZF and ZT. That's the 2-year bonds and then the 5-year bonds. They were pretty well sitting around, not really collecting anything. It was getting close to 21 days to expiration on both of them, and I had held the position for around 20 days. It was time to go ahead and close them. So I did that, and now my buying power is around 80% right now. We'll take a look. Yeah, buying power usage is around 93%. So was able to get that down and at a good level, and I've got enough cash to be able to open up a position on my 30-20-10 strategy tomorrow. So I have to keep that in mind, always have money on hand for that kind of trade. We're getting very close to the end of it though. So every gray dot down here is a position that I have open, and we only have about 8 trading days left before I fill this up. I can start collecting the premium that I've opened, closing out the positions, and putting them back up to 30 days. So it creates kind of this wheel, a cycle here of premium. I like to think of it too as like in Monopoly, whenever you pass go, you collect $200. This is kind of how I feel. I'm collecting $75 every time I get a settled position here. So I'm getting very close to being cleared here and being able to collect that premium and put it back in at the top, back in at the 30 days to expiration. And then what I want to do is increase the contract size as I get enough profit and putting it back into the system. So far it's working really well. So I want to show you how my copper position did today, but before I do, let's take a look at how Tesla did today. It impressed me, even though it's down, it impressed me, and I think we have some good signs here on the charts. So on the chart here, we can see we have a nice trend line going up now. Now this could be a bull trap, but we are seeing some good candlestick patterns here. We have the attempt to go up and it failed, and it decided to come down, right? That's what we'd expect to see. We saw a signal for a reversal. Now we're coming down, but now we also see a signal for another reversal on the downside. So we could see some momentum being pushed up here toward the end of the week here and even up to earnings. So if it follows this trend line, which I believe it is, we'll be set up pretty good for earnings. And what I'm kind of hoping is that as the price goes up, because what I have is two put positions here, two put spreads, one is at 175 and the other is at 180. I'm hoping to be able to get some profit before earnings comes out in the middle of April here. So that's my game plan for Tesla. I don't want to have to hold these positions in through earnings, but if I have to, I will hold on because, hey, I do believe that long-term Tesla is going to be pushing up. I believe we're in a giant bull flag. If you look at the 5-year weekly chart, it looks like one giant bull flag. I think the company is a good company, and it's going through some economic pressures right now, and people aren't really sure about it right now. And it's an interest rate sensitive stock, so interest rates are high. But I think at the long term, Tesla is going to be a big winner, and it's worth it for me to hold on to the position until it moves on. That's not the best outcome for me, but that's something that I'm willing to do, is to hold on to the position until it works for me. So copper was my biggest hitter today. I had a big loss just today on my P&L, around $156. But here's the thing. The price didn't even move that much, right? So when it opened on Sunday afternoon, I was instantly down like $100. And the reason why is because the implied volatility had gone up. Now the price did shoot up, and that caused the implied volatility to go up. When I bought the position, copper was at around 68, and now it's at 79.5 on the IVR. And I've seen it go all the way up to, 84, 94, up into that level. I was thinking we were seeing new lows, and actually I was wrong. That was the bottom of the IVR and it's going up. So how does that affect my position? I've currently have a strangle on right now with copper, and we can see that when the implied volatility goes up and I'm already in the position, then this affects my current account position. So we can see here, even today, and we look at the per contract implied volatilities. If I decide to go up on that implied volatility, my theoretical profit curve goes down. What I need for it to happen is the implied volatility to go down and that curve goes up. So that's really what I'm looking for, is for the implied volatility to go down. That causes the option prices to go down, and that helps my position because I'm short these options, and what I want to happen is the price of those options to go down over time. So I need the implied volatility to go down. So when copper makes moves, the implied volatility goes up and it causes a red position. Now, this puts me in a tough place right now with copper because I only have so much time before I hit 21 days. Right now, I'm at 24 days till expiration. I opened this position at around 30 days till expiration, and I'm not making a profit. So that means what's probably going to happen is at the end of this week, I'll have to close this position, hopefully for a small profit, but it could potentially be a loss. And what I plan on doing with that is going to the 57 days to expiration, which is the next option here, and then opening a position there. And the reason why I don't want to just roll the position to 57 days, for one, that's a really long time. This is a very volatile position. And so I don't want to keep the same call and the same put at the same strike price going out 57 days because the expected move is much bigger and I would collect a really good premium, but I'd rather just take my loss, make the adjustments that I want, and put myself in the position that I want for that 57 days to expiration. We'll see what happens. I want you to keep an eye on my copper position to see how I do, because it is going to be happening at the end of the week, and it could be a loss that I have to realize. And hey, we'll both learn along the way. So I'm a new options trader, and my goal is to get a 50% return by the end of this year, and I'm documenting it on this channel. So if you're interested in following me on that journey, hit that subscribe button. And hey, if this video was a help to you, hit the like button, and we will see you on the next video.